Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Now, today is the 25th, Tuesday, the 25th of February, 2020. And welcome to the show. Let's get started. Let's open up the charts right here, and let's take a look at what's going on. First thing we're going to take a look at is silver. The price is getting knocked down a little bit again. Here's the thing. I'm going to talk about this for a minute, what's going on with this. We got a situation happening in the world right now that's causing a tremendous deflation. Absolutely unbelievable, powerful deflation that the situation is causing. And in a deflationary scenario like this, once deflation starts to really get a hold and starts to run away with itself in the world, markets, well, pretend you have a market in Beanie Babies. Okay, now this is just a pretend market I'm creating for you guys. And say each Beanie Baby is worth $1,000. Okay? And say there's 1,000 Beanie Babies in the world. Okay, so we got $1 million market, right? It's been pumped up because everybody wants these Beanie Babies. Okay, here's what happens. All of a sudden they start to sell because we go into a deflationary scenario. And the valuation for Beanie Babies is $1 million market, but the first guy sells his Beanie Baby for $1,000. All of a sudden the price drops, Now the Beanie Babies are only worth $900 a piece. So he's collected $1,000, the first guy, that sold, but now the Beanie Babies are only worth $900 a piece, and the whole market's valued at $900,000. So the marketplace has lost $100,000 for a $1,000 sale. So $100,000 worth of market cap is gone. And you see where I'm going with this? Just because you have a high market valuation, that market valuation is based on every share being worth the peak market value. When the market starts to fall, and for this reason, there's not as much money that's actually there, because when they start pulling money out, it deflates the balloon so quick, and this is the way with all the markets are like that. So all these valuations, people think they're richer than what they actually are, because when the money starts to come out of the market, all of a sudden the money just disappears. This is the power of deflation. Unbelievable. Now, we're looking at silver. Silver is a funny, very unusual commodity because it's used in industry a lot, But what if all that industrial use drops off a cliff through a deflationary scenario like what we're in right now? And they're not using as much silver in industry. All of a sudden you got surplus. Maybe not, because on the other side of this coin, 70% of silver is gathered, from the mines, comes in from the mines. That's where silver comes from. It doesn't come from the Tooth Fairy. It doesn't come from Santa Claus in his workshop. Silver comes from the mines. 70% of the silver production comes from mines that don't mine for silver. You say, well, what are they mining for then? If they're not, 70% of the silver that comes in the world comes from mines that don't mine for silver. They're not mining for silver. Silver's a byproduct. They're mining for copper, lead, zinc, tin, these other metals. So, what happens if there's a deflation? Well, all of these mines that are mining for these other metals like copper's not needed. Copper's used extensively in things like construction. Well, when we're going through a situation like we're going through right now, what construction? Well, the only thing they're going to be building is new hospitals. And that's not likely really to happen that much. So construction will fall off a cliff. Copper prices will fall off a cliff. Zincs, lead, tin, all these metals will fall off a cliff. These mines will close up. And all of a sudden, we start to lose silver production from the mines. That loss of silver production can make up for the amount of silver that's not needed in industry. So one kind of cancels the other one out. sort of a deal. You know what I mean? Now, there's only one thing left for silver, and that's how much bar and coin demand is there going to be? Well, that's a big unknown. But going into a crisis, I would think that bar and coin demand would pick up substantially, where industrial use of silver would drop, right? Mining supply would drop, right? Uh, so one cancels the other one out, like I say, and then there's bar and coin demand. Bar and coin demand picks up substantially. If that were to happen, we could actually see silver shortages in this situation, even though the industrial uses for silver drops off. Because that's been canceled out, remember, by the amount of miners who are not mining for silver anymore because it's a byproduct of copper, lead, zinc, and tin. So this is where we stand with silver. I'm going to have to keep a very close eye on the amount of silver that's being consumed in bar and coin demand. I'm going to have to keep a very close eye on that to gauge the silver price in the upcoming, as this crisis that we're in right now is unfolding so fast, it's moving from day to day. I'm keeping up with it on my channel called Glenn Travels America. Just you want to go there, you want to subscribe, just type in Glenn Travels America and you'll find it on YouTube, on the search engine on YouTube. It's easy to find. That's where I'm covering this situation that's unfolding in the world. I'm also covering it on here. I'm covering the effects of it on here, on this channel. So we're looking at the effects. And the effects are unfolding so fast. Things are happening so fast in the world with this. This is such a fluid situation that it's actually hard to stay on top of it and what it's doing to the markets. So here's the silver price today, $18.31. We're down a little bit, we're down 29 cents on the day, but I don't see it running away to the downside. In fact, I'm going to tell you, I haven't looked at the stock market today. I'm thinking they had a big day yesterday, down 1,000 points. I think that buyers are going to come in and try to snatch up because they're in this mentality of buy on the dip sort of thing. But I haven't looked at it yet, so I'm going to wait to see. It's going to be a surprise to me. Just like opening up a box at Christmas time, I can't wait. Okay, so first in order to get there, we got to go through the cryptocurrencies and talk about them. They're deflating just a little bit right now. I mean, $275.8 billion industry, 63.2% Bitcoin dominance, with a Bitcoin price of $95.30. This is like smoke in the wind. You don't know which direction it's going to go at this point. If the wind changes, I'm telling you, cryptocurrencies right now it's kind of a pivotal time which way it's going to go in this crisis. Is it going to go up? Is it going to go down? I don't know. It's kind of been holding in here between, say, $9,500 and $10,000 for a little while now. And it's one of those things where it could fall either which way. I think I know which way gold and silver is going to go ultimately, but we don't know about this yet. Let's take a look now at the Dow. And yeah, I was right. It's up 76 points. I was right. They're buying in on the dip. But you notice something. It's not very enthusiastic buying. Let's just put it that way. Be it as we had a 1,000-point drop yesterday. Normally you get a big drop like that, and they're all buying in on the dip like crazy. They just can't wait to get those stocks. Right now, it's only up a measly 76 points today. As news keeps coming in, I think what's going to happen is as news keeps coming in, we're going to see this just keep getting worse and worse and worse. Falling. And a few weeks ago, I told you about these 1,000-point drops. Think back, remember my shows. I said, guys, we're going to see 1,000-point drops. Well, we've seen the 1,000-point drops, but guess what, guys? We haven't seen any 2,000-point drops yet. Guess what? They're coming. They're coming. Wait for it. Wait for it. This is the situation we're in. You know what? There's going to be a mad rush into fiat currencies as a safe haven, you know? And then they're going to rush in, but they're all going to rush back out again because ultimately that's deflation, and the Fed's not going to allow any no matter what they have to do. I don't know what tricks they got up their sleeve, how much money they might have to print, and just exactly how they'll inject it. But that's the big thing, and all these guys who are panicking and running into the dollar are missing, is the ability of the central bank to print unlimited amounts of fiat currency. You can just guess what's going to happen when they do that. They're going to rush in, but they're going to rush back out, you know. I remember there was a show with Eddie Murphy, you know, he did called the Nutty Professor. And he played the part of an old woman, you know, and she looked over and she said, Cletus, come on, Cletus, come on. She said, you walk over, but you limp back. You know, that's the thing. They'll rush in, but they're going to rush out on the other side. Okay, let's take a look now at U.S. Treasuries. Treasury yields are falling. This is doom. This is doom right here. What I'm looking at, you know, with these Treasury yields just falling like a stone like this. And if you think the Fed's buying all these, they're not. You know, they might be buying a little bit on the short end of the yield curve, you know, T-bills and stuff, but they're not buying out in the long end right yet. Not yet. They're not buying out on the long end. These are scared investors, and this is where they're moving. They're not moving into gold and silver right now. If 1/4 of the amount of money you see going into treasuries today was going into gold, we would see a $2,000 gold price. If 1/4 of the money that's piling into treasuries was going into gold. So they're rushing into the dollar. They'll rush in, but they're going to rush out the other side just as quick once this whole thing flips. Once it gets down to a certain point where it triggers the Fed. The Fed's going to get triggered. And when they get triggered, they're going to print. And they are going to print like you've never seen them print before. And that's coming. And that's why these investors are going to get trapped in dollars. Because when they realize their mistake, they're going to try to get out. And, you know, I mean, this whole thing is just crazy. It's going to turn into Crazyville. Let's take a look now at the U.S. dollar and see what it's doing. Yeah, it's going to be strong, and it's going to stay strong. The dollar's going to stay strong as long as we got this deflation happening. Right now, the economy is deflating. It's not inflating. Inflation is what causes hyperinflation. Deflation doesn't cause hyperinflation right now. So we're not moving toward hyperinflation right now. We're moving toward deflation. But this can trigger hyperinflation because when the reaction comes to protect their fiat currencies, to protect the system, that reaction is what triggers the hyperinflation. Hyperinflations are most often triggered by a deflation or a deflationary event that triggers it into action. Okay, listen, thank you guys for listening to this market report. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next video. Bye-bye.